Hello and a warm welcome to my YouTube channel. In this video, I have covered the metal index and a select few stocks among them. I hope you like the content and will subscribe to my channel and share it also. Now, in my previous video on Nifty, I had suggested that interim top was in the making and that it was a level not to get into fresh longs, mostly across almost all sectors, was giving signs of exhaustion and all that. And it was, in fact, from a short-term perspective, it was definitely not a buy at all. It was more of an unwinding scenario which was taking place over the last 1 week or so. Now, and I hope the way I'd explained it and all that helped my viewers to, save money and save capital instead of getting trapped at this level. Now, for this, let's see what kind of damage it has done to the metal sector in particularly. The link for the Nifty video is also given in the description below. Now, one of the biggest casualties of the correction which took place last week was the metal sector. It had quite a sharp collapse, just like the English batsman did at Lord's. There was a gap down on the 18th Friday, and now it is approaching a support level of 5,200 odd levels out here, all the way from 5,600 odd. It's come down to that level, 700, sorry, from 5,900. So this particular level is now, from a short-term perspective, very important. 5,175, 200. Failure to hold this level will further push it down towards 4850, 4857. However, in the extreme short term, that's would be in the extreme lower time frame, it looks slightly oversold right now. So there is a good possibility that it could give a smallish pullback to the gap down area between 5,550 and 5,675, and thereby making a lower high for the timing. So I'm not looking at this particular fall which has taken place right now as a end of correction and resumption of rally. I'm looking at it just like something which would be the first leg of the fall, and goes back, covers the gap at the most, and then comes down. In case this 5,200 odd level is not tested, it just does a, from tomorrow onwards, it does a turnaround from these levels out here. So overall, 4,850, 875 is the kind of level I would be looking for to again consider going bullish on the metal stocks, not before that. Now let's have a look at some of the metal stocks, starting with Tata Steel. Now, the reversal has come after 17 monthly candles. Now, 17 is again a very important Ichimoku number. We tend to see reaction around that number, and it's reacted accordingly out there. The gap down in the daily chart out here has got it all the way down to the Ichimoku daily support out here of 1,360 odd levels. So currently, again, this one in the short term looks oversold. So we could see a bounce back happening in Tata Steel from these current levels out here for to try to cover the gap, provided these lows of 1360 is held, 1350 at the most is held. We could see a bounce back all the way to 1450 odd levels, 1425 to 1450 odd levels, where it would see a kind of pull back, again a lower high, and then pull down. On the other hand, failure to hold 1,350, 60 would push it all the way down to 1,275, which would again be a very good opportunity to add long. So either we see that level coming straight away, which is doubtful, in my view. It could give a smallish bounce back and then retest again, something for a lower high, uh, low kind of setup. The monthly is an amazing chart out here. So any dips in Tata Steel are actually opportunities to buy. There's a fantastic breakout. So all pullbacks will be bought into. It's more of a stock to buy on dips rather than going aggressively shorting. In fact, it's one of those strong ones uh, out there. Next stock I have in mind is Tata Steel. Sorry, the Steel Authority of India. Beg your pardon. Steel Authority of India was, in the month of August, the August series, we saw metal stocks in the first half of the series do a sharp rally. Vedanta, Tata Steel, Hindalco, JSW, they all did a bounce except for Steel Authority of India, which went into a sideways pattern, as we can see out here, a complete sideways pattern. And one of the reasons for this sideways pattern was that the stock tends to get into a derivative band, thus losing momentum. So whatever short-term momentums was there were getting muted because every time it was getting into band, there is no fresh new longs were missing in it, and so on. So it was causing a hindrance to the rally completely from that point of view. Now, for the short term, the stock has got a very good support at 110. So, if this level of 110 is very crucial out here, it needs to hold 110. So, at least to give a bounce back till 125, 30 odd levels, where it faces resistance now, 125, 130. Stock, as I said, regular ban. So, very difficult even for those with positions to roll if it continues to be like that. So short term, very murky area. Again, a gap down stock. So it will try to cover the gap in that zone of 125, 130 with 110 being very crucial for this. Is 109, 110 level. I would be very cautious at that level out here. Uh, if that 110 level is not protected right now, or say on the bounce back 115, this current low is then not protected, 115, 116, suppose it gives a bounce back, then the stock has a chance to go all the way down to 85 odd levels. Now it's might sound in the short term as a stock which will cause some problems in the short term, but overall it's one of the top pick stocks from a medium to long term perspective, as we can see in this channel breakout which it did in the month of February. Steel Authority, so you can see it was a long term channel breakout in the stock. So right now this looks just like, a part of a huge upside opening in the stock. So it's again a stock, keep adding on dips, keep adding on dips, so an SIP on the way down like that. On the other hand, if the stock manages to push its way up, I would only above 145, I would say that this was a false breakdown, and the stock continues its uptrend, then it goes till 165 odd levels. If that would be the case, and that's otherwise, it's a buy on dips. Immediate short term, from a long trading perspective, no at all. I would look to buy the dips. Always buy the dip because from it looks like it is a multi-bagger stock. Doesn't look like one. Definitely is one of the top picks which can be a massive outperformer after this short-term correction gets over on. And finally, the last one is NMDC. Now, NMDC has given a breakdown in both weekly and daily, suggesting the next major support now at 135, 140 levels. 135, 140 could push a little bit down. So from 140, 135, that's the kind of level where the next support comes into the stock. Again, extremely oversold in the short term short-term point of view. So a smallish bounce, a dead cat bounce, or rather I would put it as a dead cat bounce, is possible in NMDC now back to 160, 165 levels, where it would again face selling pressure in my view near 165 or 67 odd levels. As you know, we can see out here a lower a low, a lower low, again a further lower low, lower high, lower high. So the pattern is suggesting that the downward move is still on. Any bounce in the short term will again lead to some selling till it makes a consolidation base on the outside. Again a stock just like Steel Authority of India, which is a definite multi-bagger. Uh, Stocks like these have given massive breakouts after a long period of correction. We can see out here. From 2018 all the way down and now up. So it's just all these stocks are, even if they give us pullback some short term, medium term, the medium to long term for these stocks are fantastic. So more planning to be done in investing in these stocks on dips rather than looking for short term trading opportunities would be more ideal out here. I hope you find this video content useful and would like the video and do share, subscribe and share this channel. Disclaimer, this is not a trading advice. Kindly do your own research or take an advice from an expert before taking a final decision in your trade view or investing view. Until then, bye for now. Take care.